All right, welcome back, everybody. Happy Sunday night. I was out of town for a little bit, but wanted to go over an update on the portfolio, where I'm at, what I'm planning to do in the upcoming, week and just in the future into year end. But ultimately wanted to touch on a couple things here and just go through a general update because I haven't done it for, I think, a couple weeks. If you don't know who I am, I'm Ben Collins. I'm CFA charter holder and Chief Investment Officer for Options Autopilot, which is an automated options trading platform. A lot of this has been done with automated options, and some has been done with kind of directional stuff that I've been doing. So we'll kind of go over all of that in general. I did want to mention, and again, this is kind of proving the point. I know I beat a dead horse here, but I still laugh every time this happens. I was on a flight on Thursday to California for a meeting for Thursday and Friday and Saturday, and Options Autopilot was obviously managing trades because I don't have to pay attention to the automated strategies. So I just want to give you an example here. And if anybody really wants me to prove it, I can show you my ticket. We left at 11:50 or 11:10 on Thursday. So that was the 23rd. So you can see all these trades that went off on the 23rd happened automatically. I wasn't paying attention. I did get notification while I was mid-flight because I did get on Wi-Fi, but didn't necessarily think about it, and it was just happening. So again, I still think it's awesome every time that happens. I text Zach and be like, just manage it while I'm traveling. So that is the benefit, and it was doing that. And I'll also mention that one that I think had been sent last week actually just filled today once the market futures opened again. So we can kind of see, we'll kind of start off with that. We can see the futures are actually up in the pre-market. I believe if we go to CNBC, I believe there is news of maybe a China trade deal, and that's what's moving it up. Yeah, I had a big tech. Yeah, I thought there was a headline of them maybe coming to an agreement on trade for China, but maybe not. Maybe they're just up because of earnings. But that's what I had seen a little bit earlier, but not that it really matters. Just the fact that it is up and the position closed because it had already been opened last week to close, just hadn't been filled yet. So let's kind of dive into, I guess, just the general market. If anyone recalls, you can see I'm down because I'm leaning short on this ES. These are not automated. This is my own manual stuff, which is, as I've mentioned, been hurting me. So just going to show that it's probably better to not be manually doing this. But in general, because I'm long so many other things, I just figured it'd be a little bit better to have something that's kind of leaning short in case we got to pull back. And it did help for a little bit last week. You can kind of see, though, this is pretty much right at the money, and this one's, this in the money, and this is right at the money. I only have 52 days left, so it's kind of tough. You can see I'm making $85 a day from Theta, but I'm leaning about 133 shares short. So if we get a rip at the open, we're kind of already up. You can see how this is hurting me and how it can hurt you leaning short. I'm assuming the VIX has dropped, so that's kind of helping. But you can see, had I just been doing this, which is part of an automation, just on the put side, I'm up almost 69%. So this would be closing pretty much at $1,250. That's getting completely countered by my down 2,000 on the call side. This just kind of goes to show that it really is kind of not helpful, I think, in the long term to do this. This is basically kind of like a modified iron condor. It's a double 111 both on the put side and the call side. But this is why the put 111 I think is beneficial because you have no risk to the upside. And you can still potentially make money if the market falls slow enough. So just take some lessons there. It's still possible I might roll this out. I've already moved it up, you can kind of see, but I might just close both of these down and then do it again and just go into year end maybe with a little bit, obviously a less of a short position because if the market keeps ripping, then it's going to continue to hurt me. And it is kind of annoying to have those things counter some of your other kind of profits. in general, if you recall, obviously these MESs are smaller versions of ES, so I've started to do a lot more higher frequency of these. So every day I'm putting on an MES trade, and eventually my idea was I was going to be replacing the ES, and I'll pull that off and gain a lot more capital available to trade with. I was just hoping that we get a little more of a pullback, and then I'd pull off the call side, but again, that just goes to show the discretion can kind of mess you up. And it might be better for me to just close the whole thing down and just keep upping my MES positions. The issue is, again, MES is a little bit less liquid, so you got to keep that in mind in general. Crude oil, it's kind of working. Again, this is just an automation 111 that is currently up money, and we'll check in a little bit if I'm actually up on oil. Oil's been kind of a whipsaw in general, so we kind of look at it, yeah, I mean, it's been kind of all over the place. So I think I did hit a profit, and then it opened another one. So despite kind of this drawdown, I did have one close for profit, and then it opened up a new one. Let's look at the market overall, S&P 500, because it kind of looked like it had topped here, right? And I kind of did my last update after the market had just taken this plunge on the announcement, I think, of some new tariffs. But right there, that was kind of a fake out, right? It looked like it could have been a double top, and maybe that was going to be the trigger of a new downtrend, or maybe at least some profit taking into the end of the year. Doesn't seem to be the case so far, literally making a new high. So, the market will do whatever it wants, and as people say, it's going to inflict the most pain on the most people, which seems sort of silly that if it goes up, that's pain, right? Or it climbs the wall of worry, where it seems like, why can it still go up, but it still does at times. So you just, again, you don't trade the market you want, you trade the one that you have. That's why I think the automation is helpful regardless, because it'll just do it and you don't have to have input. So usually when it doesn't feel good to put something on is probably the best time, but it's just better to take yourself out of it. And that's coming from me, who I do love trading in the markets in general, but I think we've learned, and a lot of institutions have proven over time, that algorithms and automation is actually better than human emotion. So that is the whole point of Options Autopilot and why we created it. So Intel, they had earnings. It popped. If you don't know exactly how this position has evolved, you can go back and watch my other videos. You can see I'm up 11,777 year to date. This started out as basically a $5,000 position. Now I've kind of converted it to a call spread. It was just straight up calls before, and then it's still kind of working. After the earnings, it popped and then immediately sold off. So I don't think that's positive. I think if it continues to pull back, yeah, I mean, it made a new high and then immediately reversed right back down to this level. We'll see where it opens on Monday. Maybe it'll be higher with the rest of the market. If that's the case, I think I'll be up, but it has been annoying to do the call spread, because had I just left my original calls on, I would definitely be up more than I am now. But the idea is long term, I should be able to hopefully get a higher return on my risk by doing the call spread versus just risking all of my profit with just long calls. So that's kind of the point there. If it continues to pull back, or even like pulls back into this level, I might uncover some of my short calls, or I might just convert it back into long calls. Obviously, I would have to reduce this position, but we will see. RIVN has been a huge pain. I had reduced this position down to 10 contracts from 14 because it was breaking down. I put the line in the sand in another video is basically like 1250. Realistically, yeah, if it closes below 1250, I think that the direction is lower, even though I think they're good cars and they have some potentially good news catalysts coming out. The market's obviously telling me otherwise, so I would cut my loss at that point, because I was up a couple $1,000s, and then it's come all the way back to being down. And I'm not down a lot, but if it starts to break down, I'd rather avoid further losses and then I can reassess and look to re-enter if I still like that position. SOFI has been the biggest winner so far, and I've definitely been a little bit active in this one. Again, this started out as a $5,000 position, and I would add, and then I sold my just long calls, created this call spread again, kind of similar to Intel. Actually, I think I did Intel after SOFI, if I recall. But then I also have been selling puts. So I closed down a few because it was starting to pressure those puts, and I was mostly doing it for kind of a volatility play. And so as it was breaking down, I started to reduce my short puts. I am actually fine owning the stock. It's about to have earnings on the 28th, and my hope is that it moves higher, and then volatility collapses. It's possible that it moves lower. My short strikes are 20. Oops, my short strikes are 21 and 22. So the most I have are 20 contracts at 22, and then I have 5 contracts at 21. If it pulls back this week into earnings, I might sell a few more of the 21s because, again, I'm fine owning it down there, and I think that it would have to then really collapse for me to lose all this profit. And at this point, I'm just playing with the house's money, and that's how I view it. If hopefully it moves higher and these kind of collapse in value and I get a majority of that premium, I will close those. If it actually is up this week and this gets maybe close to 50 or 60% on these short puts right here, probably makes sense for me to just close it because that is a majority, and then I remove risk and gain capital to do other positions. In general, I'm still bullish on SOFI. If we look at this again, I mean, it looks like it still wants to move higher, and this would be all-time new highs. I still have an idea or kind of feeling that I feel like they're going to buy a broker dealer or something. I think they get a really high margin on actual advised assets, and they don't really have that much at this point. They have like $1 billion in AUM, and I think if they bought a broker dealer, they would instantly gain a few billion more at least, and then quite a few more users on the system, which could open up opportunities. And I mean, if they financed the whole thing, they basically could be getting paid to get new customers and then get new business. That's just how I feel like they could unlock some value. I have no clue if that's even their strategy, but it makes sense to me. I would think it's positive on the news, but maybe the market would say, oh, they're spending money on this. But I definitely think long term that would be very positive. We'll see what happens with earnings and what else they kind of say from there. I mean, if this fully kind of breaks down, I mean, I'm not back to break even until, I think it was the $17 level. So it'd have to be a pretty big move down, and I'm getting assigned for that to really hurt me. Of course, it would suck to give up all that profit. But that's, again, I'm just trying to sort of take the money I've already made. So it's not like it's free money, but it's not my original capital. So I can kind of progressively add to it is kind of how I'm approaching it. If we go here, again, year to date, and we look at everything, again, up 31,778. It's obviously fluctuating. I think that this is pretty much the highest it's been. I think the last video that it was this high was right around 31,000. So we'll see what happens. Again, it makes it a little annoying that I am leaning a little bit short. It would be higher if I was not, but I don't want to be totally long. I just still want to be harvesting premium there. Bonds have continued to work. You can see just on these contracts. Obviously, this is just the current contract that I'm up 664. We've seen interest rates pull back a decent amount, and I haven't increased my number of positions yet, but I probably will this week. You can see it's moving up. It's maybe easier to see if we use TLT, but I've basically been still just doing the 111 this entire time, and you can see it's kind of definitely been moving up in this direction. I would say that if we zoom out, it's coming into maybe this downtrend. Maybe it'll break it. And if it does, then I think that rates might be coming down even further. We will see what happens. If they are, then that might be negative for the economy, and negative for the market. But who knows? Maybe we'll pull off a Goldilocks scenario where it's kind of just sitting around here, and that's pretty reasonable, and the market likes it. So the other thing I haven't touched on, I mean, my XRP is still down. Haven't added to that. Probably should have when it kind of had that collapse, but I'm trying to follow my rule as any long position or any kind of speculation like that, I'm not adding unless I'm up money. So again, I'm not risking any more of my actual capital. Different if it was actual stocks. Bitcoin, still doing the put spread strategy that's automated. And I still haven't, I don't know, Bitcoin's a little bit interesting, at least the Bitcoin ETF. Maybe it'll recover here, but it kind of looks a little suspect and starts to come down. I think what will be interesting, I don't know if we'll ever run in the scenario, but I want people to be aware of this. People like Michael Saylor and those strategy kind of positions, I think that they do have an average cost of Bitcoin that could end up getting them in trouble. I can't remember who spoke about this. Might have been Andre Jick or maybe How Money. I can't remember if How Money Works. Another YouTube channel. They were kind of saying, what is their average kind of strike effectively on Bitcoin? If for some reason we got a big downdraft or big sell-off in Bitcoin, it's possible they could get pressured. I don't know if it would actually force any sales, but that could be a time to probably buy Bitcoin if you wanted it for long term. But again, in general, I'm just doing the put spread automation. I'm just kind of harvesting that premium, and I do think the trend is higher in the long term, but there could be some volatility because it hasn't been acting like a risk-off asset. It's been acting like a risky asset. So when things kind of happen, they're getting sold off. Gold, I still haven't done anything to turn that automation back on. It basically almost went hyperbolic here and then finally sold off. I almost bought some puts around here, but of course I didn't, so it's pointless to say. But if it pulled back into this level, I'd probably turn my automation back on just because I do think long term it's, again, probably good if people are thinking we're devaluing the dollar or people are getting off the dollar. There could be still some demand for both gold, Bitcoin. That's, again, why I'm kind of doing this across all asset classes, the automations. So if you want to learn more about that, obviously you can check out some other videos and go to optionsautopilot.com. And I kind of cover that whole deal as well. So that's pretty much it. I think I covered everything in general on the market. I'm just keeping all these things rolling. I'm probably going to take this off if it gets pressured more tomorrow. I haven't decided if I'm going to roll it or if I'm going to then just increase my MES allocations again. You can kind of see still year to date similar for all the automations. Obviously, good percentage. This will fluctuate, of course, but in general, not bad. I think what I'm going to end up doing, it's interesting because in the past few, I've kind of, I got profit open right now, but I think I was up a few $100, and then with the collapse, it kind of closed some out at a loss. That's just how it goes. That's obviously why the automation is helpful. But I might convert all to this 90-day MES, and that's kind of my goal effectively. This is just because I started this probably a few weeks ago, and I'm going to increase this and make it all 90-day MES, maybe 100, but I need to kind of build up to it. So the idea is that I'm kind of putting them on every single day, and then once I get to a certain point that they're kind of rolling off at an equal rate, it's better to kind of go farther out because my my actual profit that I can get is higher, even though it's obviously less, but I can just kind of increase that. And then any potential drawdown should be significantly less than if I was doing this all with ES. Just because it's a bigger contract. So that's, again, my thought process and how I'm kind of trying to take this profit, leverage it, but then also not suffer some big drawdown. So If you like that, appreciate that kind of transparency, please like and subscribe. I'm basically going to try an experiment where if I get up to I'm up enough now, but if I'm up 35,000 or whatever, my goal is to try and basically do like 3,000 a month on that, just as an experiment. That technically would cover my rent or housing expense. And I think that'd be pretty sweet to just say automated options is covering my rent at this point. So that's kind of my goal. And again, if I do it with MES and I space it out on multiple positions, I should hopefully not suffer a huge loss. Whereas if I was doing that on ES, that would only be like 3 to 4 positions, versus if I do it on MES, I could do it across maybe 30 positions. So that's the thought process. If you want to do this, follow along. Don't follow what I'm doing, of course. This is my own capital and not advice. This is just what I'm doing with my investments, and this is just a portion of my capital. But I do want to highlight how this is possible and just the benefits of automation and by comparison. So, I mean, ultimately, I will try and automate what I'm doing on the long side. We just have to kind of wait and see. And of course, that's a little bit harder to do and less beneficial because, again, that's still kind of just speculating. Whereas, the selling of the options is more harvesting a structural inefficiency in the options themselves. That's the benefit of using them. So, yeah, appreciate everyone watching, and we will see how this goes in the future. Stay tuned and subscribe.